Hello everyone, myself Deepak Gupta, logging again on this platform of College Dekho Learn, and in this topic today, National Income 5, we will discuss about the various aggregates of national income. So before we understand this word aggregates, we should first revise in a nutshell that we used two words, national income and domestic income, and we understood that the difference between the national income and the domestic income conceptually was that though they both denoted the value of goods and services produced, but the value of the goods and services produced for the goods and rendered provided for the services, but the question will be that such value of the goods, if taken from the perspective of the residents, then we use the word national income, and if taken from the perspective of the place, that is the domestic territory, then we use the word domestic income. And we have already discussed in detail what are they, what is their definitions, and how are they to be calculated, because the between difference between the two has to be NFIA, which was net foreign income from abroad. So as discussed earlier, NFIA was net factor income from abroad, which denoted that how much factor income has been taken into India, has been brought to India by the residents, known as FIFA, factor income from abroad, and it to be deducted by the factor income which has been taken away from India by the non-residents who are working in our domestic territory, that we use the word FITA, factor income to abroad. And this all has been discussed in detail, where we justified that national income will be equal to domestic income plus NFIA, and this formula does not always prove the fact that, or I should say, this formula does not always imply that national income is more than the domestic income, because this NFIA can either be positive, can either be negative, or can either be zero. So we have already discussed, if NFIA is positive, then national income will be more than domestic income. If NFIA is negative, then national income can be less than domestic income. And if that is zero, then national income will be equal to domestic income. And we will show these facts with certain figures as we move forward in our journey on national income. But before I move further, there is a point that is always recurring in my brain, and that I want to ask and discuss it with you. That says that, for example, if X Limited manufactures solar panels, and as we all anticipate that because solar panels are environment friendly, then they are provided subsidy by the government, and ideally such solar panels are either tax free, that is no GST, no indirect tax on them, or if there is any indirect tax, then they have very low indirect tax, that is the GST levied on them. So if we take an example where the low GST rate is say 12%, and they are provided a subsidy of 5% on their MRP. So if I say that the solar panel के ऊपर आपने फैक्टर कॉस्ट इनकर करी, अब वो फैक्टर कॉस्ट के चार कॉन्स्टिट्यूएंट्स हैं एज डिस्कस्ड अर्लियर, रेंट, वेजेस, इंटरेस्ट. They basically denote the cost of the product and the profit. So in financial terms, this cost plus profit shall be equal to the sale price, now commonly known as the MRP. But from the economic perspective, all four are the factor cost. So in a way, MRP or the selling price denotes the factor cost. So if we say that the solar panels MRP was rupees 10,000, now we have to add GST on it, that is the indirect tax, and because it is 12%, so it comes out to be 1200, that is at the rate of 12% of 10,000, and we have to deduct the subsidy from it, which must be 500 at the rate that is 5% of base price, that is the 10,000, that is the subsidy. So we are getting a net figure of rupees 10,700, which is to be paid by the consumer. So the earlier consumer could have paid rupees 10,000, but because of these additions and deletions of the indirect taxes and the subsidy, the new price to be paid by the consumer is 10,700. So my point of view is that when we calculate the value of the goods, then whether I should take it as 10,000, whether I should take it as 11,200, whether I should take it as 9,500, or whether I should take it as 10,700, because it denoted factor cost, it denoted factor cost plus IDT, this denoted factor cost minus subsidy, and it denoted factor cost plus IDT minus subsidy. So this amount of 10,000 is known as the factor cost as discussed earlier, and we have this new funda that we ignore these two figures, and this amount of 10,700 is known as the market price, is known as the market price, that is MP. So market price is equal to the factor cost plus indirect tax like GST, and it is to be deducted with the subsidy. And this indirect tax minus subsidy, as discussed earlier, is also known as net indirect tax. So we can say that the market price will be equal to factor cost plus net indirect tax. And on the same lines as above, this net indirect tax can be positive. It will be positive when subsidies are less than the indirect tax. This NIT can be negative, which will happen if the subsidies are more than the indirect tax, and this NIT may be zero. So this will happen if indirect taxes are more than subsidy. This will happen if indirect taxes are less than subsidy, and this will happen when indirect tax is equal to subsidy. So it will imply that when NIT is positive, then market price is more than factor cost. In this case, when NIT is negative, the market price will be less than factor cost. And in this last case, when the NIT is zero, the market price will be equal to the factor cost. So the question is that whenever we calculate national income or the domestic income, then we have to remember it very importantly that only factor cost is considered. That only factor cost is considered. It means ideally The national income and the domestic income will be only at the factor cost. So only at the factor cost. For further also, when we talked about the final goods, which were capital goods and the consumer goods, so this capital goods basically denoted the investment. And this investment, as discussed earlier, was either gross investment, or when we deduct depreciation from such gross value, then we arrive at the figure of net investment. So the another point to be imported, that national income is also always to be taken only at the figure of the net investment, and not the gross investment. So we should always calculate national income and domestic income, keeping in mind the following 4 points: that first, only factor incomes, or I should say the factor payments, are considered, and not the transfer income. So no transfer income will be a part of the national income calculation, and this indirect tax and this subsidy are a kind of transfer incomes, and hence they have been taken off, which implied that national income or the domestic income is always at factor cost and not the market price, because market price will include the transfer incomes. Thirdly, it will be the value of only final goods and not the intermediate goods, because their value has already been included in the value of the final goods. And last not the least, that the value will always be net, that is value to be taken for the value of the calculation of national income and domestic income will always be after depreciation. So all this funda gives rise to the fact that ideally domestic income denotes domestic product, that is the value of the goods and services produced either by the residents or the non-residents in the domestic territory of a country. And when we talk about the word national income, which denotes NP, national product, that is the value of the all goods produced or the services rendered by the residents, whether it is in the domestic territory of a country or outside such domestic country, then this gross domestic product can either be gross at the market price, or it can be a gross domestic product but value taken at factor cost, or it could be not the gross value but the net value after depreciation, the net domestic product at the market price, or it could be the net domestic product at the factor cost. On the same lines, the national income can be gross on the market price, it can be gross national product on factor cost, or it can be net national product at the market price, or it can be the net national product at the factor cost. So they all denotes various values. They all denote the various values considering various uh, cost figures. So they are known as the aggregates. That is the different values that could have been calculated. Aggregates of, this is the aggregate of domestic income, and this is the aggregate of national income. But keeping in mind these conditions, that is the points to remember which are so crucial for the correct estimation of the national income or the domestic income. So we can say that this NDPFC and this NNPFC, they what denote? So when we say the word domestic income is taken on the net value, it is always taken on the factor cost. So domestic income is NDPFC. And when we say the word by default national income, by the word by default national income, the NNPFC. So we can say that because we said national income is equal to domestic income plus net factor income from abroad. So we can now FC plus NFIA. So that is how we summarize. So these various aggregates are a subject matter of question, and therefore it can always be a data where various figures are given to calculate different aggregates of the national income. So if I summarize that GNP MP इसे अगर हम लोगों ने indirect tax, net indirect tax. So the net indirect tax was indirect tax, or I should enhance it later. तो अगर से net indirect tax minus किया, then we will arrive at the figure of GNPFC. इस GNPFC में से अगर हम लोगों ने depreciation माइनस किया, so we will arrive at the figure of NNPFC. और अगर हमने इसमें से नेट फैक्टर इनकम फ्रॉम अब्रॉड माइनस किया, देन वी विल अराइव एट NDPFC. So this NNPFC will be the national income as shown on above, and this NDPFC will be the domestic income as is shown above. So we can write it this way also in a more I should say explanatory note that GNP MP में से हम लोग माइनस करें इनडायरेक्ट टैक्स माइनस उसमें से हम लोगों ने अगर माइनस किया डेप्रिसिएशन, सो वी विल गेट NNPFC माइनस किया NFIA which is, so then we will arrive at the figure of NDPFC. So if I again explain it further, so GNP MP में से माइनस किए इनडायरेक्ट टैक्स प्लस करी सब्सिडी, क्योंकि माइनस माइनस प्लस हो गया, देन वी विल अराइव एट GNPFC. यहाँ से माइनस किया डेप्रिसिएशन, तो हमारे पास क्या आई नेशनल इनकम. नेशनल इनकम में से माइनस किया फर्स्ट इन फर्स्ट आउट नहीं है ये फैक्टर इनकम फ्रॉम अब्रॉड, और माइनस माइनस अगर हमने प्लस कर दिया फीटा फैक्टर इनकम टू अब्रॉड, दे विल अराइव एट द फिगर ऑफ domestic income. So you can use any of the above given explanation or the writings or the formulas to arrive at the desired figure. So for example, if I say that the domestic income of a country is, let's say, 95,000 crores, the factor income from abroad is, say, 8,000 crores, and the factor income to abroad is, let's say, 5,000 crores, and the depreciation is 2,000 crores, The indirect taxes are 18,000 crores and the subsidy given by the government is 6,000 crores, and we are asked to calculate national income, and we are asked to calculate GNPMP. The domestic income, that is 95,000 crores, plus NFIA, that will be equal to factor income from abroad, that is 8,000, minus factor income to abroad, that is 5,000. So in this case 98,000 becomes your national income, and here the national income is more than domestic income because NFIA is positive. But if I calculate the GNP MP from here, so we will have this domestic income which will be NDPFC depreciation, और हम इसमें प्लस करेंगे NFIA, then we will arrive at the figure of GNPMP. So the NDPFC, that is the domestic income, is this case is 95,000. Net indirect tax is indirect tax 18,000 minus subsidy 6,000. Depreciation is 2,000 and NFIA as discussed above is 3,000. So it will be 95,000 plus 12,000 plus 2,000 plus 3,000. So the figure will come out to be 1,12,000 crores. And that will denote our GNPMP. That these aggregates can always be calculated as per the given figures. So basically we have to calculate the missing figure from this equation which has been given in the detail. So this is the most detailed equation where the datas will be given and the few missing figures will be required to be calculated, and that is how the question on the aggregates comes in the paper. So it's up to you how much you practice. We are always there to help you with any of the problems that may accrue when you are doing these questions on your own. So you can always log into our platform and we can always devise a time to meet personally to solve your issues and problems. On this note, myself Deepak Gupta, logging off from this platform of College Dekho Learn. Thank you. Goodbye.